Hey everyone, this is Abs and Drake on digital. This is DeFi Top Signal, episode number 4. Today's date is the 10th of March, 2023. And there's a lot going on in the markets right now. As you know, since the last episode, Silvergate Bank has gone under. And yet again, this morning, we received news that SVB Financial Group, which is the Silicon Valley Bank, is also looking to liquidate and to sell off their bank potentially, and it's just another bank run. We are continuously just trucking through this bear cycle, and it's not fun. I've experienced 2 bear cycles in the past. And it was not fun. Drake, you've experienced some as well, I'm assuming, and you know I don't know what to make of this market at this point, but I do have strategies in place. Drake, what do you think, and what is your current thought process on what's going on?
I mean, the biggest thing with these banks going down, there are just dominoes to fall. Now, the biggest question is what's going to be the next domino? I think the biggest concern with a lot of these banks going down is that short term, at least, it's going to put they call it choke point, but it could be like a operation choke point on the crypto market to where it's all going to be a PvP battle, which is not necessarily good unless you are an expert in the DeFi space or in crypto in general, because this is the situation where you don't have extra money coming into the system to where it's like, hey, a rising tide lifts all boats. Now is the type of time to where you look for projects and protocols that are going to A, keep on building, B, ones that have sustainable yields and revenue that aren't just diluting the shares or not shares, but diluting the tokens that they have, and then looking for ones that have been around for a bit of time. You want to be careful with a lot of projects that kind of just launched up. I was doing some, I'm not even going to say the name of the protocol, but some people may know who it is. But there was an actual project in the space that this was this, yeah, March, or no, they launched in late February. Basically, when they launched, it's almost like a cash grab. They launched, they had a seed round, seed sale, whatever. As soon as the protocol went live, a bunch of the people dumped. Like the guys who got in early, it was complete wreckage on the token. It was down like 60-70%. And then they were like, no, it was just an accident. No worries, guys. Bots just mess it. No bots messed it up. It was an inside job. Then what happened is about a week later, things started to settle off. One of the devs decided to tweet out or not tweet out, but put a message in the Discord like, hey, just wanted to let you guys know I sold a big portion of my tokens just because like I wanted to go on a honeymoon with my wife. I mean, we just got married in What? What is that? I mean, dude, you're going to see things like that. Like I mean, look, by all means, you get married, go have a honeymoon, whatever. I don't care, but don't launch a project around that time. When you launch a project, that becomes your life. That's why you want to get with teams that basically, when they launch a project, that's their baby, that's their wife.
That's
That's the
exactly right.
teams you want to get behind. You don't want to get behind someone who's like has other occupations and other positions and other jobs. You want to have that focus, or you want to have a developer that's focused on that project, and all their blood, sweat, and tears goes into that project. Just something to think about. Think about,
No,
well, actually, Vitalik's a great example. He doesn't spend his time on his wife. He doesn't have a wife. He spent his time on Ethereum. That was it. I mean, that's why you see all of the guys that that have extremely successful projects, or that have a really successful company. They are usually single. Something's wrong with them. Like, not wrong with them in that aspect, but like they have like ADHD. or they're very closed. They don't really talk with a lot of people, just different things like that. And that's just how they're able to focus. And yeah, I'm kind of beating a dead horse at this point. We'll look for someone like that.
Yeah, I mean, when you look at teams as well, like there's times where when you are going in deep into the rabbit hole of certain projects and trying to get in early, right? Like all of us are trying to. My my stipulation, my one of my top things is looking at the team, right? And you're right. They need to be fully focused. They need to be, driven to that point where they want to make sure that this is going to be extremely successful. But I find it a norm nowadays when you look at the team page and they're all anonymous, right? They're all using certain avatars. I find this really 90% of the time, probably in the NFT space, they all use anonymous avatars or their upcoming avatars that they're trying to mint for this new project, this new collection. It annoys me. It, I don't know. I mean, the project could be successful, right? But I look for real teams, and I've been, there's many times. I'm not saying that I haven't, avoided them completely, but you can make trades, you can speculate, of course, but when it comes to having real faces to the teams and maybe even LinkedIn profiles or whatever it is on their website, the About Us page, you can look at teams to say, okay, well, what have they done? And just kind of dig deep there and go into their LinkedIn, go into their whatever links or socials that they have, and then you can determine whether they are legit or not. And then you can kind of fall back on the NFT collection or the protocol itself, but yeah, it's just for me when I find that they have avatars, it's one of like those red flags. You want to make sure the team is real. But yeah, I want to bring it back to really quick about the current state of the market. And 7 days ago, the BTC was sitting at 23,200. Since then, we have dropped $3,600. That's a whopping minus 15.6%
That's a
decrease.
whopping 2 ETH.
That's that's a lot of money, man. Just across the board getting liquidated. Last week when we got together, it was $120-ish million that were liquidated across the board, and I'm sure more was liquidated overnight last night and yesterday. It's not fun where we are, but know that there are certain strategies at this point to combat this bear cycle. I've experienced the last one as well, and what I did was that, and what I didn't do enough, right? But obviously hindsight is 2020. But what I didn't do enough was just throw my entire life savings into crypto during that 2018, grueling year that when we saw ETH go down to $100. We saw it was just insane. The amount of opportunities that was sitting there in front of our face, even in 2020 during the COVID crash, during that time, even like months prior to that, we did see ETH at $100. That opportunity is long gone. I don't think we'll ever see ETH go down to those levels anymore. I think a potential, again, we can revisit back down to the $1,000 ETH mark sometime this year, maybe. And I'm just going to throw random numbers out there at this point because I love charts. I look at them every day. BTC could be in this range where BTC could hit anywhere from $10,000 on the low side to 18,000. It can range within that area, and it could be there for a long time. It can get really, really boring. But at this point in time, we're making our trek down to at least 18, and then we'll see what the hell happens in the next coming. But so the SEC chair, Gary Gensler, he's been in the news a lot lately. And he's got 3 bullet points. This is a tweet from Bitcoin Archive. 3 bullets. Bullet 1: most crypto tokens backed by entrepreneurs are likely to be securities. Huge debate over this. They're saying that ETH is a security. They're saying that a stable coin, the USDC, is a security. It's bullshit. I don't necessarily agree at all with whatever he's saying here. Bullet point number 2: lending and staking platforms come under the securities laws. Okay, whatever. We've already been through that, and it's basically being talked about over the last few months already. Platforms listing crypto securities must register with the SEC. I'm on the fence with this one, Drake. I want you to kind of weigh in on this one as well, but I'm on the fence with the platforms listing crypto securities must register with the SEC. It's just that when it comes to scams, when it comes to these projects coming out consistently every single second now, we're seeing this, and I especially see this in Arbitrum. I especially see this in BSC, Binance Smart Chain. There needs to be some kind of halt, because people who get rugged, people who have
And there's serial devs who
it's
do this too.
horrible. Yeah, and it's like you got to at least have a database or an area or have a governing entity. This is my opinion. Have a governing entity within those blockchains to vet out the serious devs. They want to have some type of I don't know. I just think that these, if it has to come down to it, some type of a gateway or something like that, a security measure where it'll give the investors, it'll give the people who love DeFi, money within DeFi, a layer of security, that feeling at least, to have some kind of governing entity or governing body that could potentially get rid of these malicious devs that are in here, where they copy and paste certain projects. And I want to use BSC as an example. If you go into Binance Smart Chain, there's literally like 5 projects on there that's legit. Everything else is just it's BS. It's bullshit.
And a lot of these are just serial devs. And in reality, it's just run by a handful of people for a lot of these projects. They launch up a project, steal a bunch of money, and they may not be physically stealing it like rugging. I mean, there are some that actually do rug, but there could be ones that just launch up a yield farm, and it's hard coded in there to where they get like 20 or 30% of all the transactions and the revenue that go through it. So what happens is, or not revenue, but emissions from the protocol, and they get those, they dump the tokens on everyone else who's buying the coin to join in the Ponzi. So if you don't understand how these yield farms work, is typically the most simplistic way is they will do like a pool 2 token, to where, hey, if you want to get this 1000% APR, you got to pair your stable coin with their said token. So let's say it's banana coin. So you got to pair USDC with banana coin. And when you pair that with the banana coin, you're putting buy pressure on it. So you're taking your good hard earned money to buy this banana coin. And now your stable coins are thrown into the system. And then when you LP with it, you are then pairing more of your hard-earned money, the stable coin, with the banana coin and depositing into the farm. So now when impermanent loss occurs, as there's not enough buyers to come in there and buy up the token, you're now going to get impermanent loss, as well as the money you invested on banana coin going to zero. Sure, you may get some of those emissions from banana and dump on the market on everyone else, but you're just dumping on the new guys that come in and buy the banana coin. Eventually, when there's not enough buy pressure, the token goes down, farm's over, we start a new farm. And you also got to factor in, I made a list of farming rules a long time ago, but if you ever see like taxes or deposit fees or withdrawal fees on a pool, that's just another way of saying, hey, this is a Ponzi. You deposit in here, we're taking 4% off to distribute to all the old investors, or at least sustain the Ponzi longer.
Ponzinomics.
Ponzinomics.
Yeah, it's just really frustrating from my side, and I just think that there needs to be some type of governing entity, and it needs to happen. Whether it's, and I don't want the SEC to snoop up into our bags and look and dig into our MetaMask transactions. Hell no. I don't think that's I don't think we're there yet. Is what I'm saying. But there is one more tweet that I kind of want to call out, and this is from one of the co-founders of Masari. So he said, this is Dan. He says regulators force banks to hold tons of treasuries. Banks load up on load up on this. The Fed will print $5 trillion. Oh my God, inflation. Jerome hikes at a faster pace ever, which we should be anticipating something happening big in the 22nd of March this month. Bonds will crash because the interest rates are hiked. Banks realize massive losses if depositors demand withdrawals. And then the last bullet item here is everyone blames BTC and crypto. It's all a joke. Crypto gets beaten up first, right? As well as the regular stock market, and that's why I'm calling out. At least we'll see 10K BTC. If it ever goes below 10K, I'm throwing everything. I'm throwing all my bags. I'm supposed to buy a house. I'm going to throw a big portion of that. We'll pause on the house, and I'm going to throw all into BTC, ETH, whatever it is, my favorite projects.
Steady, lads.
Yeah, that's
more capital.
But that's just me and my strategy. I just think that's I know where, and I'm one of those like perma bulls over time, like long term, but I'm bearish, obviously in the short term, if you can hear what I'm saying.
Yeah, I agree with you. I kind of made this tweet yesterday for some people because people are like, "Hey Drake, what are you buying? Hey, what are you buying on this dip?" So here's the thing. When you're buying something on the dip without understanding your situation, it's one of the worst things you can do. So when people are asking what to buy or what should you pick up, I mean, if it's your last stack of dry powder, don't do that. If you already have crypto, not financial advice, of course. If you already have crypto exposure and you're down to the last of the dry powder, are you going to be okay if the market drops another 40, 50%? If the answer is no, it's probably not a good idea to use your dry powder. Now, if you have no crypto exposure and you have a bunch of dry powder and the market rallies 50% from where it's at now, would you be happy? If the answer is no, well, you make your decision accordingly. Now, also something you need to add in what you're buying is, would you be okay holding that coin you're looking to buy 2, 3, 4 years, 5 years? If the answer is no, then why are you buying it? If the answer is yes, then there's your answer. So nobody knows exactly what the market's going to do next. That's why it's always best to look at the market in probabilities and manage your risk accordingly. Nobody knows exactly. So, I mean, if you have no exposure, in my opinion, looking for good, strong, sustainable protocols, I mean, that's if they are sustainable, which is very hard to find them. They could be good buying opportunities, but nobody knows for sure. So just make sure you manage your risk accordingly and understand what you're doing. And if you already have crypto exposure, just make sure you're in some strong projects you're willing to hold it out through a bear cycle, because they can get vicious.
Yeah, and it's okay to hold stables at this point. It's okay to throw in a portion, a small, like for me, in my little small group that I have of friends, and that I have my own server just to talk to them about it, because I'm apparently the go-to guy for this. But my goal, it was simple. It was January the 1st of this year, and I sent out saying that I think they were going to have a really strong rally. Despite of this rally, because it's going to end sometime, I don't know when. Despite of this rally, you are going to continuously, to buy, right? Month after month, set the automatic deposit to, in your Coinbase, to set maybe like $100 or whatever you're willing to throw in, $100, $1,000 that you don't care about, that you don't need. Throw it in there every single month and set a strategy to buy your top 3 to top 5 tokens. And then that's it. You don't have to buy a portfolio of 10 different types of tokens or 20 types. Just buy your top 3, top 5. That way it's your money is going to go longer and you're accumulating these top favorite projects of yours. And I gave him a list. And just set it and forget it, right? This entire year will be for DCAing, dollar cost averaging. And that's the name of the game. You do this before This is the same exact recipe in the past. You do this before the BTC halvening for, the entire year before. And then after the halvening, stop buying. Maybe set a time frame for yourself to stop buying and just sit. Forget about it. Go touch grass. Go pick up a hobby, whatever it is. And once the halvening triggers, typically what happens is that after 3 to 6 months after that, then you're looking at the money coming back in. There's just a huge supply shock for BTC. BTC will run first along with ETH. And then once people take profits on that, then the alts will then rise and they will make multiples. This is the same exact, bearish bull cycles, whatever it is. These cycles, they go up and down, up and down. We are in the down. We're in the middle of it. But this is the best time for you to DCA and forget about it. No need to stress. I need to start practicing that as well because I got a little over, egregious with my moves. But I've committed to do, adding every single month and just buying and holding. That's the safest way to do. It's less stress. And that way, over the, once the bull cycle starts to get revved up again, then, you're going to be sitting in nice little profits. And, look at the long term, 3+ years of holding this, 2+ years of holding this. But the initial phases that you need to look at is track towards that and understand the halvening cycles. And once you do that, there's your success. You're going to see money flowing in. It's going to take a little bit of time, and everything is going to be okay. That's my strategy.
Yeah, I agree with that. I think that's a great strategy. I mean, riding the waves is probably one of the best things to do.
Yeah, you make the most money. I've made the most money when I'm sitting there doing nothing. If my money is already in, I'm just going to sit there. I'm not going to try to trade it. If I do trade it, then I'll probably set a rule and saying maybe 10% of that bag. That's it. Everything else, you just let it ride. But yeah, I just, moving on to the next topic here, that you wanted to talk about the top derivative platforms like Level Finance, Quinta, GMX, Gains, Lyra. It's all you.
Yeah, so these are the real yield protocols that I'm looking at with the stats are great. So this is not saying it's time to buy these now. It's just things to look at for different projects that their stats are constantly going up, and stats is what you need to look for, and especially to see if they're actually drawing in earnings and revenue. Most people know about GMX constantly going up. The analytics, fees, revenue, volume, everything's just up on them. Constantly increasing. Most people know about GMX. And the best part about GMX is most of the actual volume on the protocol, which on average is like, I don't know, 6 billion a day, or no. Yeah, no, it's like 500 million a day. And most of that is coming from margin trading, which is what it should be. So when you're looking at these these perpetual protocols, they get most of their volume. Well, some will do it from swaps, which is not right. You want most of the volume coming from margin trading because that is where the revenue is coming from. The trader is getting a benefit because they're able to do like 25x, 10x, 15x leverage. The revenue is coming from the trader that is willing to pay to speculate on the market. And that's where the revenue is coming from for that. And then you even have other protocols like Lyra Finance, who they are still speculating, but they're making a more calculated trade to where it's not like 20x, 15x leverage to where a wick can basically liquidate them. With an option, you're basically buying an option, and if it expires worthless on a certain date, well, then it's gone. You can kind of look at a options protocol like Lyra Finance as a insurance. So let's say I'm gig along on Bitcoin, and I have it just at spot, and I just bought a bunch of it at 25K. Well, what I could have done to hedge my position to where it's trading below 20K now is I could have had a option that says, hey, look, Bitcoin 1 month from now is I'm going to buy a put option on Bitcoin that lasts for about a month, which expires, let's say, April 30th. And this put option will give me the right to sell Bitcoin at 25K. Well, that option would be extremely valuable right now because I'd be able to sell Bitcoin at 25K and pocket the difference. So, because it's trading at 20K, so it would be a 5K difference. Now with an option, it's going to be a little bit different. You're mainly going to have to trade with premiums, but it'll show you that on the Lyra Finance dashboard. And if you look at the analytics on Lyra Finance, it did flip. We were talking about it last week. It's flipped number one by several million now, over, what's this protocol? Open, and it's also above DOPEX. So yeah, Lyra Finance is in the top, like by far, by a couple milli now. And it's not even close. Well, I mean, sure, if you consider a couple milli close, but Lyra Finance is taking off. It's doing well, and its volume, fees, constantly going up. Still, it's just trending up. They are now at about 5 million per day. And remember, with these options protocols, what's typically holds them back is the people depositing in vaults. So I believe as more and more people deposit into the vaults, because the vaults are still profitable as well. It's similar to like GLP and GMX. They're earning like 15 to 20% yield. And typically when you deposit into the vault, it's going to be in the form of a stablecoin, SUSD, which is synthetic stablecoin. But their volume, they're at a total volume of 60 mil, 22 mil TVL just on Arbitrum. On Optimism, they got 12 mil TVL and a total volume of 94 million. They're doing extremely well. Their numbers are green, which is what you want to see. Level Finance, this is another one. This is on Binance Smart Chain. This one, it kind of was one of those things that came out of nowhere. They first launched out as a GMX fork with a little twist. They offer tranches with different risk categories. So let's say I'm Uber Degen. Well, it would give me more exposure to things like Pancake Token or a couple of other Binance Smart Chain tokens, altcoins. Or if I'm more conservative, it will give me more exposure to like some stable coins and a little bit of Bitcoin and ETH. So it just offers different tranches to where, sure, if I have exposure to these altcoins, they would do a lot better in a bull market, but in a bear market, they do a lot worse. Whereas someone who's more conservative, they're going to have less on the upside and less on the downside, and they're just trying to profit on the yield. And they offer different yield metrics. And if you go on their tranches dashboard for Level Finance on Binance Smart Chain, it'll be like, hey, 40% for low risk and like 90% for high risk. And the yields are coming from traders trading against those pools, either leveraging long or leveraging short. And for the most part, their trading volume is like 150 mil a day, which is really good compared to GMX, which is ranking in around 450 mil a day. The Level Finance market cap to TVL ratio it's extremely good. The market cap of Level Finance, at least the circulating market cap, is only like 25 mil. But the total market cap, what's the total market cap of this? It's like 325, and most of these tokens haven't even hit the market, and a lot of them are being staked for LGO token. So LGO is like a treasury asset to where as you're farming it, the only way to get the LGO token is staking your level, and the LGO is not liquid. So you can't buy, you can't sell it, you can only farm it. And it entitles you to the assets in the treasury, which are being farmed as more and more people are using these pools. So it's kind of just one of those, I guess you can call it Ponzonomic. The next protocol is going to be Gains Network. Gains Network stats constantly going up. The main difference between this and something like a GMX is that with Gains Network, you're allowed to do Forex, you can do stocks, indexes, commodities. There are a couple of different options. So just think GMX with more options, and the stats also doing well. Average trading volume, probably about 100 milli a day on Polygon and Arbitrum. And with probably a little more than 100 milli, but still super good. And Quinta is the other one. We've talked about it already a lot on this podcast. We were talking about it, I don't know, 4 days ago when it was doing around 700 milli in volume. Now it's over a billy. So they're doing a lot of volume. And the main sauce for Quinta, you can think of it like GMX, but on roids. So Gains Network, Polygon, Arbitrum. Quinta, they basically are on optimism. Nobody else is on optimism that has a meaningful amount of volume in TVL as a options or not an options, but a derivative protocol. They will probably be launching options soon. But with Quinta, the stats, just take a look at the dashboard. It's constantly trending up. More traders, more trades, and they have a really nice flywheel around the Quinta token, being that it's somewhat of a rebate token. And I retweeted this. Coolest things with Quinta is it can be used in coordination with GMX. So say, for example, you have a long on GMX or a short on GMX. You're going to be paying interest for that because that's where most people are shorting the market. However, on Quinta, you're going to be getting paid to take the opposite side of the trade because most people are short. How these perpetual markets work is they try to have a even market to where if most people are short, you are actually getting paid interest to take a long position. And obviously, if the trade isn't profitable and goes against you, I mean, you're going to lose money. But the advantage of this is you take a long on GMX and you take a short on Quinta, and you can pocket the spread, and you also get paid on Quinta and the Quinta token for making that trade in a delta neutral position. So it's basically getting a yield for taking both sides of the trade. So pretty interesting, and you can kind of see on the stats. I see this one as I've been doing a lot of wallet watching too. I see this one as not a competitor to GMX. I see it as a partner to GMX, to where people can trade on GMX and they can also trade on Quinta. So I see these two working with each other. Not financial advice, of course, but as always, time will tell. We'll see what will happen. But those are the derivative protocols that I'm extremely bullish on, and I'm looking for better entries on these protocols. Level Finance is one of those ones. It actually stood up extremely well in the bear. Even Quinta, we were talking about it last week. It was like $500 then. It's still like $500 now. But Level Finance, I'm pretty sure there is going to be a Binance listing for that thing. Just going based on the volume and how it's just holding up extremely well. Someone's accumulating it, and it's one of the top dexes on Binance Smart Chain. I wouldn't put it across to be. I wouldn't doubt it wouldn't be listed on Binance. It's just a matter of time, in my opinion.
Yeah,
Anyways,
that makes sense. Yeah, I really wanted to comment on Level Finance really quick, and I'm just looking at just a simple DeFi Llama Binance Smart Chain TVL, right? So going down from the top, obviously it's the Pancake Swap. It's 2.3 billion in TVL, and then you have Venus at 700 million. But then from there, this is why I said early on that Binance Smart Chain only has a handful of solid projects. The TVL literally drops from 700 million, and then the next one is, and I'm just talking about the native protocols. The next one is BuySwap, and that one has 200 million. Like that's a big gap, right? So what I'm saying is that Level Finance has a lot, and I'm looking at where Level Finance is. It's currently at ranked 27 in terms of TVL, and this next derivative that's up there, it's at rank 24, and that one's Apollo X, which is labeled derivatives, and it's on 3 different chains. That one has literally basically $4 to $5 million away in TVL Level Finance to flipping Level Finance as a chance to flip Apollo, which obviously it probably will happen, but with it's
technically it already flipped it.
Did it?
Because Apollo X is on Arbitrum, Binance Smart Chain, and Ethereum. I mean, not TVL wise, it hasn't really flipped it yet, like actually in just on Binance Smart Chain levels. But I mean, if they're focusing on other chains, I see it as you got to look at these things like most people flock to where it's treated best, and
Mm-hmm.
like GMX, everyone flocks to GMX,
Yep.
unless it's like a different product.
Yep. So yeah, definitely within the top 10. Yeah, and I would think that this is probably on the route to be GMX levels in terms of in the BSC ecosystem. So that'll probably put it in the top 5, right? Is what you think?
I mean, I wouldn't put it out of question. I'm
Yeah.
pretty sure CZ is going to like that one because it pumps his chain.
Hmm. But yeah, there's another thing I wanted to talk about too. It's gains. As we were talking about gains, you were talking about it. So I was looking at the charts as you were saying. When in charts, right, I usually kind of take a look at values, and when you look at the Fibonacci sequence and you kind of pull that the fib retracement tool, I was looking at, and this is on the 4 hour. No, I should probably do it on the daily. Let me do that. So based on where gains is at this point in time, when you look and utilize the Fibonacci retracement tool, is that when a price, an asset pops right up and it starts to retrace, then you start pulling out that tool to see, okay, where is the value risk is in, you want to be risk on and try to buy these at really nice discounts. You don't want to buy as soon as it starts dipping 5%, 10% here and there, right? But no, the idea is that you want to utilize this tool to look at where the 618 is. The 618 level is basically from the bottom of where the impulse price goes up. I took it at the highest price point for gains was at $11.90. If you pull the fib retracement, typically anything below the 618 is value. It's value town, right? And that's at $6.51, where we currently are sitting at this point in time. So potential good buy point for gains. I obviously, when BTC crashes and it nukes, everything else will, but these are the levels that you need to pay attention to say, okay, well, if it stays below this $6.51, $6.52 area, the idea is that this is just screaming value based on what gains has been doing in the past few months.
Yeah, I agree with that. I mean, gains is one of those things that's, in my opinion, it's a long-term bag. I like what the team is doing. I like what the protocol is doing. The stats look really good, just
Mm-hmm.
like the other platforms. And they all have their own market that they're trying to capitalize on. So, like GMX is basically your one-stop shop for generic crypto trades. So just like Bitcoin, ETH, you can even do some stables as well if you're trying to long or short, etc. But Gains Network is focusing on like the cents. So this is going to be like your forex, crypto, commodities. You can trade a little more than just Bitcoin and ETH. And then Lyra Finance is going to be your options protocol. So instead of just being like that guy, like, hey, I don't know exactly what the market's going to do. I don't know if I'm going to get scam wicked out. I don't know if Bitcoin's going to dump like 20% in the next hour. I'm not going to mess with it. I'm just going to mess with options. That way, if it does dump 20% and then ends up rocketing another 40% after that, the option would be okay. Because, I mean, it doesn't have that liquidation point. You pay the cost of the option, which is a fraction of the price of the token. So, for example, like the cost for ETH, one option on Lyra Finance, it's going to be like, I don't know, $150 for a week, or no, like 2 weeks. And that'll give you an option to buy the actual or the right, but not the obligation to buy some ETH at, well, the price that you have the option for.
Mm-hmm.
And that's the premium you're paying for it. So, for example, if I wanted to buy since ETH is trading 14.24, let's say I wanted to buy a call option at 14.50. It's a little bit more than the market price. I could pay $35 for this, and for $35, this expires on March 17th. So if ETH goes up to $1,800, I paid $35 for this option to be able to buy ETH at 1450. So if it rockets up, I basically have the right to buy ETH at $1,800. So instead of, I'm sorry, at 1450 instead of $1,800. So with that option, the price of the option, if it goes up to 1,800, your premium is going to be like $400. So you could sell that ETH or that option at whatever price you're able to get it for, just depending on the market rates, and you pocket the spread. And in that case, if you factor in the profitability on that, you basically turn $35 into about $350 to $400. That's a 10x. You can't do that just buying spot ETH. If I bought spot ETH at 1,400 and I sold at 1,800, I mean, sure, I made $400. It's the same amount,
but you're risking a lot more.
Yeah, you risk a lot more. If ETH goes to 0, you're roasted. If ETH goes to 1,200, you lost $200. Whereas with the option, the most you would have lost is $35. That's it. So that's the sauce with the option. And then you have level finance, which is focusing on tranches. So instead of someone who just was like, hey, I'm just going to deposit in oh no, I don't want to do GLP. I want to customize this. I'm more degen. I want more risk on assets. They can do that. They can deposit into the tranche and earn a higher yield if they wanted to, but they also take on more risk on the downside. Now, the opposite is true. If they want to be more conservative than a GLP, they can simply deposit into the less risky tranche. And then, of course, the last one, which is Quinta. I see this one as a partner, and this is not just me saying it. Look at the stats. The stats are saying it, and the market's saying it. A lot of wallets, they're also doing the same thing. They're using this as a counter trade on GMX, or they're simply just trading on Quinta because it offers what GMX has to offer, but more. It also offers Forex, commodities, and so on. So just a couple thoughts on those different dashboards. It's not like they're just copy pasta like, hey, we're just a GMX fork. Come check us out.
No, I'm in the same boat as you. Yeah, all amazing things, good stats and all that. So yeah, so next topic we wanted to cover was the kava ecosystem, right? You called this on our last show, and this was just on, I think it was early Friday or was it late Thursday? But otherwise, here's the stats. Kava ecosystem grew by 48%, almost 50%. And that equals around a growth of $85 million inflows into the ecosystem over the last 4 days. It's insane. It's great. Great percentages across the board, right? So Vara,
nuts and ham.
Yeah, Equilibrium. You called this in our last show. So Vara Equilibrium Dex, over the last 4 days, the token appreciated over 250%. Mare Finance is a lending platform. Mare over the last 4 days grew over 300%.
Yeah, so Mare and Equilibrium, they go hand in hand.
And it's just insane, like insane numbers, insane price appreciation over those two tokens. And I played around with it for a little bit as well. I basically bought the top. Basically, this is DeFi top signal, and I bought the top for Vara, and I tried to trade a little bit with Mare tokens, and it didn't work well either. So yeah, this is top signal. Drake, you basically called this and farmed this since for I don't know how long you've been in Kava, but it's bullish. It looks like there's a lot of money inflowing, despite of BTC dying for the last 15%, right? Where it decreased.
Let's talk about why that is.
Yeah, let's talk about it.
They're getting from the Kava, basically the Kava Rise program. They're getting 750 milli in Kava tokens, which at the time of recording, it's like 90 cents a token. So you can basically call it like whatever. $620 million, $630 million. And that's being juiced into the Kava economy. And with Equilibrium and Mare, those are basically the main two dexes on kava. I mean, sure, you have kava mint and kava lin, but those aren't on the EVM side. And Equilibre and Mare Finance, those are, I guess you can call them reflexive to each other. So Mare Finance, they have a flywheel around Equilibre. It's similar to Son on. It's actually the same exact team behind Sony on Optimism. They have over 150 million in TVL now. I don't think DeFi. Yeah. Oh well, I guess it's not 150 million in TVL because that's looped. So yeah, I guess the DeFi llama is right. It's got 42 million in TVL, and basically what people are doing is just looping the stables and farming the mess out of the Mare token. But here's where the flywheel comes into play. When you're staking your Mare token, you're actually getting emissions from Vara, and these two go hand in hand to where a Mare is actually going to be reflexive with Vara. As Vara price goes up, Mare price goes up. When Mare price goes up, this also causes a price increase on Vara because they have a bunch of liquidity on Vara, so they're using that and bribing for their pool. So they have buy pressure on the Vara token because they're buying, getting the token, and voting on pools, and they're also bribing other stakeholders. So this incentivizes people to deposit. And in my opinion, I do see Vara doing a similar thing as Velodrome did by paying users for locking up their tokens. They haven't done it yet, but I'm sure they will, which will kind of kickstart the flywheel and let it roll. But obviously, with Bitcoin, as always, time will tell. We'll see what will happen. But typically, when you have liquidity incentives, you are going to see a strong economy for the country of kava, if you want to call it that. But the country of Bitcoin kind of determines where the market goes. I mean, it's good to see liquidity inflows, but it'll be interesting to see what will happen, to see if people will still play the kava game. And one other thing to note with these protocols is that on Vara, just be careful aping into the token. For me, I got in, even at this price, I got in at much lower prices. In our Discord group, we were chatting around it when it first launched around 4 cents. I wasn't able to get in at 4 cents. It was probably around 15 to 20 cents. But selling when the emissions rolled out is the best play. And then what you would do is you would pair up into any of the pools, preferably not in the Vara token yet, and start farming the emissions, like the ones with the highest yields. So some of the ones that had some really high yields were the My stablecoin and USDC. Those are now diluted. They're like only 30%, but they were sitting at like 500-600% on stablecoins. And how crazy it juiced it. About 15 million in My stablecoins flooded the ecosystem within like 24 to 48 hours, that's crazy. Because My initially started out, My is cheat out their stablecoin. It initially started out with just $1 million, and they're like, we need more liquidity, and they literally had to juice up the bridge and fill it up. But a token that normally trades around 99 cents, this thing was trading like over $1, maybe 2 cents on the DEX. So what people were doing was they were bridging My from like Phantom or from Avalanche and getting it at like 99 cents, bringing it onto the Kava DEX, and basically swapping out My for USDC and arbitraging like 3% on stables. The arbitrage could still be there if you want to check it out. But for the most part, it was a pretty good arb. But yeah, just keep your eye out on Mare Finance as well as Vara. Vara is going to be one of those things as the liquidity black hole, to where as long as Vara is doing well, I see the rest of the ecosystem plays doing well. But as soon as it starts going down, like you see on Velodrome, Velodrome is starting to see its downtick. The price of the Velo token, since we were last talking about it, is down 50%. But the TVL is not down 50%. It only dropped maybe 10%. These things are reflexive and forward-looking. So as soon as you see a downturn or a small downturn, that's when the token price just completely tanks, because you're starting to see the market looking forward. So just something to keep in mind. Take a look on Vara and Mare Finance for that as well.
Yeah, I was looking at the wrapped kava and Vera LP, and it's still paying out 1,500% APR.
Yep.
It's it's crazy. Wrapped kava to USDC 400%, and it's a lot of opportunity here. I mean, for this, especially that right now, it's when you find during the bear cycle as well. Here's another way to play it: is that during the bear cycles, you can just find your favorite farms, whether it's you go on Atom, you can go on Cosmos really quick and just look at Osmo. I mean, Osmo is literally like the only thing that's on that, right? The last time I looked.
Yeah,
But Osmo
basically.
tokens are kind of it's kind of bullish, right? Because it's the only DEX. But is there other DeFi projects on there? No, probably not. But yeah, I mean, looking at that, find your favorite projects to farm, and if you have high conviction in it and you think that the token's going to last through this bear cycle, farm the hell out of it. Stack these tokens. Don't care about the impermanent loss, and you're going to be gravy in the next bull.
Yeah, I agree. If you pick the right ones, you'll do extremely well. Just the risk you take on is accumulating a token that's not going to do much. And sure, that is a risk. But you always have the risk to reward. So just something to factor in. I mean, as always, a good strategy is if you're extremely bullish on a project, you can't go. I mean, of course, there is smart contract risk, but you can't go wrong taking some collateral like USDC, some stables, some Bitcoin, some ETH, and using that to farm in positions and not even have impermanent loss if you want to do that. Now, if you're extremely bullish on the project and think it will be successful, like me personally, if you're bullish on Kava, Equilibre is going to be like the heart of Kava. If Equilibre does well, I think Kava will do well, but if it dies, I believe Kava is going to be struggling. So I mean, if you're bullish Kava, you're probably going to be bullish Equilibre. These two go hand in hand. So if that's the case, you can use it to start farming over there. And if you're extremely bullish, you can take a little more skewed position to where it's favored to like, hey, look, I'm going to get more exposure to Vara, but I understand the risk I'm taking on. Because, like you were saying, yeah, you will receive some permanent loss because there's a lot of emissions. But if you think it's going to turn something out like Velo, well, I mean, Velo, when it was around 1 cent, 2 cents, sure, after it peaked around 5 cents or 10 cents, it dropped all the way down under a penny. So if you're willing to ride out those waves and just farm and accumulate a bag, and you think it's going to be bullish long term the project, then I mean, a year, maybe a couple months from now, you could be sitting pretty. But remember, be careful, manage risk accordingly, and always have a plan. If you throw everything all in and it goes to zero, are you going to be okay? If you throw in 5% and everything goes to zero, are you going to be okay?
Yeah, I mean, if it goes to zero, I mean, typically I will get angry. I'll get pretty sad, but it sucks. But life goes on, and that's why you have to manage your risk.
It's true.
Next topic, bullish on Phantom, right? Drake, I want to get your insight on why you're bullish on Phantom, and then I want you to just to ramble off 2 top projects that you have and why you're bullish on them.
Gotcha. All right. So Phantom, the biggest thing with them, their runway is mainly what I'm bullish on, and they've just been hammered, man. Like Phantom, I mean, looking at the TVL within the past 24 hours, they're down 6%. I believe it's mainly reflexive to the Phantom token. Um, Actually, yeah, it is reflexive now that I'm looking at it. The amount of Phantom that is coming on chain is actually going up, but the dollar value is just going down. But like the Phantom ecosystem, in my opinion, has some of the most innovative DeFi protocols, and like the only solidly DEX that actually had some innovation, well, not actually had, but had the most changes was Equilibra or Equalizer and the Equal token. This DEX, instead of doing like the 4-year locks, they did a 6-month lock. And if you look at their VE NFTs, they never, like, if they do go on sale, it's 5% and it's usually gone within minutes. Whereas you look at something like Velodrome, those things are, they'll be sitting on the market even at a 40 or even 50% discount because there's not as much demand for them. Most of them are basically being subsidized by, hey, look, lock your tokens and we'll pay you some OP. Instead, with Equalizer and the Equal token, people are choosing to lock. And the difference between, well, if you haven't found out already, this is one of the first picks I like on Phantom, is Equal and the Equalizer exchange. If you look at their DEX volume, let me go ahead and pull this up now. Compared to all of the other chains like Optimism, Arbitrum, etc., the DEX volume on Equalizer for Phantom USDC and Equal Phantom, that is actually number 2 and number 3. So they aren't competing with someone like Uniswap. Whereas instead, the main competition is just going to be Spooky Swap. And that's mainly because they have extremely deep liquidity. Right now, the Equalizer DEX has actually surpassed the amount of liquidity on Spooky Swap for the Phantom USDC pair. So in my opinion, it's only just a matter of time till all the volume just comes on to Equilibre. I like Spooky Swap. I like the team. I like what they're doing. But there's not, it's hard to compete with solidly. The second coin that I like is Beethoven Finance. They basically flipped it on the head of how emissions work. So with Curve, you lock up your tokens, and the person who locks it up automatically is like, hey, look, you get 4 years, or if you lock it up for 4 years, you get maximum voting power. Whereas on Beethoven Finance, in order to get maximum voting power, you have to stay with the DEX a really long time. So the difference between this is if someone on Curve wanted to get a massive share of governance power, what they got to do is wait till the Curve token is cheap, buy a bunch of it, and then hold a massive share of governance power. Whereas with Beethoven X, the guys who actually control the protocol are the ones who have been there the longest. So the max voting power you can get is after like 11 or 12 weeks. It's called reliquary, but basically you get boosted multiples on the yields you can earn, and you have the highest amount of voting power the longer you stay in, which will give you more bribes, more rewards, etc. And this is basically just aligning the incentives of the long-term holders compared to the short-term. There are a couple of other ones that I'm looking at, but those are two of the main ones since I'm just going to limit it to two. The other ones I want to give a shout out to are like MPX, Mummy Finance, and Brush.
Nice. Yeah.
Oh,
Same.
and F-Bomb. F-Bomb's multi-chain though, so.
No, thanks for that, dude. I think Equal is my top as well. After looking at the Dune analytics of Equalizer Exchange, the just alone, just like high level, if you just look at the total supply being 3.3 million, and then the circulating just being around 250K tokens that's out there, I think. And then so with, and I'm pulling it up right now, with the locked Equal that's locked, it's over 1 million right now. So that means that 60%, almost 60, sorry, no, almost 70%, almost 70% of Equal tokens are locked. And with that, it's basically, and it overtook the volume and, did you say liquidity of Spooky, Drake?
The liquidity and volume,
Yeah,
or
liquidity and
uh,
volume, right?
yeah. So the liquidity, it actually surpassed the liquidity on the Spooky Dex.
It's
The
insane.
volume hasn't surpassed yet because I believe most people are like, hey, I want to make a trade. I'm going to Spooky Swap. So instead of using like aggregator, it's almost like the pancake swap phenomenon. But I see as more liquidity is being vamped from Spooky Swap, eventually people will catch on and be like, bruh, the slippage is rough.
Yeah, yeah. So Equals my number one as well, and then my number two, I just wanted to shout out to PaintSwap.finance. There's some fundamental, strong fundamentals that I'm looking at as well. They are looking to roll out their first play to earn game, They announced it sometime middle of January, and it's an upcoming release of Est for Kingdom. It's a play-to-earn medieval fantasy browser-based RPG game on the Phantom Network. And really, the really exciting about this, and hey, how you make money off of this, is that Brush tokens will be the in-game currency with deflationary burn mechanics. So it's basically what I'm thinking about this is that I'm sort of somewhat comparing this in-game mechanics to what Magic did on Arbitrum, right? Magic tokens. And when I first saw that on Magic, and I was looking at their marketplace, everything was being dealt within just Magic tokens, because I was first brought onto and heard about Magic when I was playing with the Beacon, and that's another game there on Arbitrum. But I saw Magic at 23 cents, and I said to myself, well, if they're going to be dealing back and forth with Magic tokens, and just for that alone, people are going to need they're going to need a handful of Magic just to transact to buy this NFT, that NFT, and there's a shit ton of games that's already brought out in NFT collections that are being dealt primarily in Magic. So once I saw that, this Brush just reminded me of it. So looking at how Est for Kingdom, this play to earn on Phantom, I think Brush tokens are going to be much needed during this whole marketplace once it opens. They have a Brush. Sorry, PaintSwap.finance. They basically have this. It's an NFT marketplace, and they all deal in Phantom tokens. And this will be the first burn mechanics for Brush, from what I'm seeing. And if you just go into their Discord or go into their Twitter and look at what it looks like, this S4 Kingdoms, it looks awesome. It looks sleek. There's an upcoming announcement just yesterday that they are excited to announce that they're giving away alpha testing version of S4 Kingdom to the holders of these the 10 starting collections listed below, and they gave off a bunch of 10 different collections that's on Phantom. Phantom Punks, Bot Boy, Magic Cats, Beethoven X, Portal Heads, Scullies. If you hold any of these, as a holder of these NFTs, you will receive a whitelist access to the alpha testing S4 Kingdom and be able to mint 2 characters. So all you have to do is pay the gas only. And you're going to be in the whitelist snapshot, which will take place on the 14th of March. So that's next Tuesday, given that today's Friday. So if you hold any of these, and yes, I picked up 2 portal heads yesterday. And the floor price for those portal heads went from, I think it was around like 18 Phantom, and now it doubles in price. I think it's around 50 to 55 floor price right now for those portal heads. I think everything else, other those other collections, they're a little pricey. They're like 3 digits. So I think portal heads is the opportunity right now. It's 50 Phantom. That's $13-12 at this point, maybe even less because of the dip. It's still a massive opportunity to get this whitelist, and then you can get these 2. You can be able to mint these 2 free characters on S4 Kingdom. So that's I'm number 1 is Kingdom. Sorry, no. Number 1 is Brush, and number 2 is Equal for me.
Yeah, I didn't even think about Brush and what they were having with the game development. I just really liked what the team was doing, and for the most part, their NFT marketplace is by far, in my opinion, the best UI UX out of all of them out there. And
it's fun to use.
Yeah, it's easy to use too.
Yeah, so this opportunity for S4 Kingdom, take a look at that little 2-minute clip that they have on Twitter. It's awesome. It looks
I'll
great.
have to take a look at that.
Drop
Me a link in the Discord. I'll check that out.
Absolutely. And then the last section here, I just really want to talk about the NFT selection section. We have Jack Butcher and checks and why we're bullish on that, and why you're bullish on that. And then we want to talk about a quick update with the other side, right? The other side deeds. It's the metaverse. That's the floor price currently is at 1.8 ETH, and they have an upcoming Voyager that you basically it's a second trip, and it's based. This update came out this morning. It was March the 25th, and they're looking for that's the second update where other deed holders will also have the opportunity to invite a guest into the second trip. And these other holders will have other deed holders will have priority access, and it's going to be it's a playable region where they had the first trip. I'm not sure if you saw clips of that, Drake, but it looked pretty cool. I like what they're doing. They have a lot of money to develop this and a lot of time. I thought I was seeing that you're not going to be able to utilize your land until I think it was the end of this year, 2023.
I
But
haven't even looked into the other side. I know it's from those monkey NFTs.
oh yeah,
um,
yeah,
but I haven't even messed with those, man.
yeah. So the idea is that Yuga Labs is the owners of and the creators of Bored Apes and Mutant Apes and the other side Deeds and Kennel Club, and so they are worth I probably at this point maybe even $2 billion as a
Wow.
company, and they have a lot of money to throw around. They also created the recent sewer passes and the opportunity to play that game to make money. And these sewer passes are currently going for 2.3 ETH floor, and it's a lot of opportunity for the folks that are in the ecosystem, and a lot of the folks that are not in the ecosystem. They could potentially flip some of these NFTs, such as the other side, and just I think it was around 3-4 months ago. The other side was around 1.2 ETH, and then being close to almost that 1.9 at this point. Just it's nice appreciation for that's the lowest barrier of entry for any of their ecosystem.
That's crazy.
hmm Yeah, and then so we wanted to finish out on checks. If you wanted to take the floor on this one, I actually honestly haven't looked into checks. I know what the collection is, and I know what Jack is it Jack Butcher or is it Butcher? Um, he's
Jack, I'm just gonna call him Jack B because I don't want to butcher it. Um, Pun intended, right?
yeah.
But yeah, so the TLDR with checks and Opepin is another one of his creations. But basically, the whole, I guess you can say, aurora around it that was really interesting is that it was like, hey, look, we're going to launch this little thing. It's literally like it looks like a Twitter check. They launch it and they're like, hey, it's going to be an open mint. Anyone can mint as many as they wanted, and basically with an open mint, it stays open, and someone can say, "All right, open mint's closed." And once it closed, that's when it went crazy. So here's the sauce behind these checks, and this is also why there's a lot of open editions now, just in general on in the NFT space, is because Jack Butcher, he basically turned this into a trend based on how successful his project was. So with checks, it's um, the best way to look at it is like a art Ponzi, to where in order to get the highest check, which is the black check, you have to burn a certain amount of checks, and based on the amount that were minted, I think the most you can get is like 3 or 4 black checks. So out of all the actual items, there's only like 7,000 now. They're started out around 16 or 17,000 just about, and most of them have been burned. So what happens is you have these check panels, and I think it's like 80 or 60 or something like that. And there's like 80 different checks on just like this NFT slide. So in order for me to get to the next slide, which is 40, I would take a 80 check and an 80 check, and I would burn these two NFTs. So now once they're burned, they're no longer in existence. And now I have a 40 check NFT. In order for me to get to the 20 check NFT, I now have to burn a 40 and a 40. So now once I burn these two 40s, there are no longer 40s and those two 40s in existence. Now there's just a 20 check. So in order for me to get a 10 check, I have to burn a 20 and a 20 to get the 10 check. So what this does effectively is that in order for me to get the 40 checks and the 20 checks, I have to burn that many of the original 80 checks. Because in order to get those and go to the level that you need to, you have to burn so many of them. So let's calculate this. In order for me to get a 40 check, I'm going to need two 80 checks. In order for me to get a 20 check, I'm going to need 4 of those checks. Why? Because I have to get 2 of the 40 checks. 2 40 checks equals 2 80 check. So 2 and 2, 4. And I that's where you get into that exponential amount of burning in order to get to those levels, to where the TLDR is there's only 4 black checks. If someone wants a black check on their PFP, they're going to have to buy a bunch of these 80 checks. And that's why these things scream from less than 0.01 ETH to its peak at like 2.5 ETH. This is because people were speculating and buying these tokens or these NFTs, and they're like, hey, I want one of these checks. So then he also launched another project. This one is reflexive to checks. This is called OPEPin Edition. Basically, you can look at these projects as reflexive to Jack. So as Jack tweets about them, they pump nuts and ham. An example with OPEPin, there was not much activity on it. And then sometime earlier this month, or actually late in February, he was like, hey, look, checks was successful. What about these OPEPins? We really haven't given any details on it. As soon as he tweeted that, these things took off from around 0.08 ETH to almost 1 ETH in a matter of, I don't know, 8 hours. So that's the Jack Butcher effect. He's got a bunch of followers on Twitter, but basically the TLDR with this guy is he's innovating in the NFT space, creating different ways to look at NFTs, to where you may look at an NFT like, hey, look, this is a PFP, whereas Jack is like, no, you basically have a share of visualized value, and our NFTs can change, and depending on how much of the NFT you get, it determines your level, I guess you can call it, in the community. So if you have a black check as part of the visualized value community, it's like, oh man, you're that guy. And then like with the OPEPins, it's still kind of in the air what he's going to do with it. But maybe he'll do something with checks, or maybe he'll do something completely creative. When you're looking at these NFTs, you're basically betting on Jack to create a cool, innovative game around those NFTs. And that's basically what his projects have done. And most of them that are reflexive to checks do extremely well. The things Jack touches basically turn to gold.
No, thanks for that. I didn't realize it was so complex to burning certain NFTs so you can get another different color check, like a black one. That's the reason why they have over 7,000, right? And it just so you're saying
So it
is
was
that
like 16,000 at one point, but they're burning them.
wow.
So
And
that's
what's
why.
the floor price at this point?
The floor price is like 1.3. NFTs are always going to be reflexive to ETH too. So if ETH is tanking, NFTs typically tank. So for those who are new to the marketplace. And if ETH is also, if ETH is pumping, NFTs also don't really do that well. It's only when ETH does nothing or is sideways do NFTs do extremely well. NFTs are for when ETH is boring.
Yeah, so there's one more project that I just thought about that went crazy this early this week. So I think it was on Monday or Tuesday is when this collection came out. It's called Gitcoin Presents. I actually didn't look into it, but I did pay attention to the floor price though. So a lot of folks were talking about this on Twitter, and I think the one guy, his name is Adam Hollander. He basically wrote on the 8th, just 2 days ago. He said that basically he bought these Gitcoin presents at 0.05, and the the peak price after he purchased this, the peak price went from 0.05 all the way up to almost 0.7. And so
Wow,
he literally turned like $85 into like $1,100.
good for him.
And he bought obviously like double digits worth. And so I don't know. So the idea is that the reason why he bought this was mainly because Vitalik's name is actually affiliated with this. And we have to do a little bit more digging on this, but this project apparently has, if you check the website, it actually has Vitalik's signature on this, and basically it's It's really crazy, and how the price point's up. So once it went up from 0.05 all the way up to 0.7, it now retraced back down to the floor price of 0.28, so which is where it is right now. And there's only 5% of the whole entire collection listed. So
Nice.
keep your eye on that one. Who knows if this one's going to have even more legs after the big pump? But it's really interesting stuff that you have literally an iconic name such as Vitalik Buterin on a endorsing an NFT collection, and it just goes crazy. It goes 0.05 to 0.7.
Yeah, it's crazy to think about that with NFTs. I mean, if you thought some of the altcoins can pump, NFTs can do that like crazy because they're illiquid, and most of them aren't even liquid or listed a lot of the time. So they're going to be extremely volatile. But just like they pump, they can also dump that hard. So be careful with FOMO.
Absolutely. Absolutely. But that basically wraps up our episode of this number 4, and the upcoming shows that's going to be like next week. We are very excited to bring on other potential influencers so we can interview them, get their insight on DeFi game theories, potentially NFTs per usual, and basically the overall outlook of the markets and how they are going to play the game during this this bear cycle.
Yeah,
So
we got a couple guests coming on. On Wednesday, we're going to have Nick Drake on. He's pretty conservative in the space, but he's not a whiz kid, but he's a whiz adult in the space. Really smart. If you guys haven't looked into Nick Drake on Twitter, he basically runs Revelo Intel, and he's doing a lot of stuff for the DeFi space, basically speeding up the learning process for a lot of users, as well as those who are extremely busy. He summarized a lot of the topics into his Revelo Intel little server. But basically, he has his finger on the pulse of what's going on in DeFi and in crypto. He's been in TradFi TradFi for about 20 years, and he's also in the crypto space, man. He's big time whiz. And then the second guy we're going to have on Friday is Noah Seidman. This guy is also pretty conservative, but he's a whale in the DeFi space, and he loves like the curved convex ecosystem. His ethos is, if you don't pay me, forget it. I'm not getting it. That type of thing. But he's a cool guy. I'm excited for the two guests next week, and I hope you guys will be as well.
yeah, so stay tuned for more DeFi Top Signal episodes forthcoming. So Drake, you want to just throw it out and close it out with the one-liners?
As always, baby, wisdom one-liner time. By the way, guys, if you guys enjoy this content and enjoy these videos, we're trying to spread this podcast out to more and more users. That way, other DeFi degens just like you can enjoy this type of content. And tell us what you guys think of the video. What do you guys want to hear more of? What guests do you want us to have on? We're out there trying to create a better experience for you guys. And in order for us to do that, you guys have to give us some feedback. So please give us some feedback. And if you guys do enjoy this content, drop us a sub. We're going to hit you guys with Proverbs chapter 9, verses 3. She has sent out her servant, and actually, we shouldn't do this. This is talking about wisdom. So let's do this. Proverbs chapter 9, verses 7. Whoever corrects a mocker invites insults. Whoever rebukes the wicked incurs abuse. That's so true, man. When you're correcting someone who's going to be arrogant and rude and who's already like, hey, I'm right, you're going to get insults for it. Whether you're right or wrong, it doesn't matter. The reason why is because they always think they're right. But anyways, just a quick wisdom one-liner. But thanks, guys. Thanks for tuning in.
Take it easy.
All right. See you guys.